Welcome to Everything Money Plus channel. We're going to go over quite a few things today. Home Depot reported. We're going to go over a little bit of their earnings release, what it might be telling us about the U.S. economy. We're going to go over NVIDIA. They're going to be reporting soon. We had Microsoft and Amazon both downgraded. Alibaba, the White House is talking some shit about Alibaba. And look about the market today. The market's been very volatile, up and down a lot today. But first, let's start with Home Depot. Home Depot reported revenue of $41.35 billion, beating estimates of 41.07, but they reported $3.74 per share in earnings with estimates of $3.83. So they missed there. The stock is down significantly right now. Let's pull it up right here in our software so that people can see this. Share this tab and let me bring this thing up right now. So guys, as you can see, Home Depot is down 4.5% right now. It's at $341.99. At what point today, it was at $340. So it's off its high, off its lows, but it's still a stock that's down significantly. Now remember, we don't care about short-term price fluctuations or short-term quarterly results. When you're buying a stock, you're buying a piece of a business. If you bought part of your neighbor's mechanic shop, you would not care about what it was doing quarter to quarter. You want to look at trends. The economy seems to be kind of softening. So it's expected that a company like Home Depot, Lowe's, and Target would do as well. Opportunity for investors to buy a great company. The question is this a great price? Yes, the stock is 4.5% down today. Doesn't mean it's a good price. Yes, its all-time high was $439 this time last year. So it's down 20-some percent, 23% from its all-time high. That doesn't mean it's a good price. Just because something is discounted doesn't mean it is cheap. It means it's cheaper, does not mean it's cheap. So we have to apply our principle-driven investing approach to Home Depot. So one of the questions I'm going to ask is, do I think Home Depot will be around for a long period of time? The answer is yes. Do I think 20, 30 years from now, their revenue and profit will be higher than it is today? The answer to that for me is yes. So the third question, can I pay a reasonable price today for this company that gives me an adequate return on my capital? If the answer to that is yes, I need to make a decision. So let's take a look at some of the metrics here. 8.86% profit margin last year, down from 10% over the last 5-year average. Free cash flow is up over the last 5 years. Net income is down. Dividend, 2.5%, eats up a big chunk. $9 billion of their $14 billion in free cash flow. But look at these returns on capital. For those of you who don't know, this is a sign of a really good business. It means when they invest money in the business, they get high returns on it. But before we go analyze the company further, let's look at their quarterly announcement to see what is going on here. Okay, so revenue was up 2% for the third quarter. That included $900 million from the recent acquisition of GMS. Comparable sales for the third quarter increased 0.2%. Comparable sales in the U.S. increased 0.1%. What that means is they take stores that have been around for 12, 15 months or more, not new stores, and say, how are their sales doing? I like that sales are up, but guys, inflation's also up 3%. So it didn't really keep up with inflation. So is this good? Who really knows? They made basically the same amount of money this quarter as last quarter, but they had less shares. They had less earnings per share. Let's see, what else we got? Their earnings per share diluted was down from 378 to 374. So as the CEO said, our results missed our expectations primarily due to the lack of storms in the third quarter, which resulted in greater than expected pressure in certain categories. What is he saying there? He's basically saying storms drive a lot of quick revenue. If there's a lot of storms in this country, people go to Home Depot a lot more. Makes sense. The question is that a long-term thing? I don't know. Like that's not something to bank on, but a big part, because this is a big country with a lot of different climates. So storms are going to drive a lot of that profit and revenue. This is what they're guiding for the fiscal 2025. Total sales growth of approximately 3%. Comparable sales growth to be slightly positive for the same 52-week period. 12 new stores and a gross margin of 33.2. So let's go look up their gross margin right now. Let's go back to this screen. Their gross margin was about 33.35. So it's pretty much here and about where it's supposed to be. So, okay, that's pretty good. I mean, guys, I think this is, if we're suffering as an economy, this is something to watch for in Home Depot. Let's see here. What else we got? Capital expenditures, approximately 2.5% of total sales. That's pretty low. So their free cash flow is cash from operations, less capital expenditures. But 2.5% of sales is actually pretty decent. Let's see what that means here. Let's go back. I realized I wasn't sharing that. So, okay. But they're selling for their free cash flow and PE are about the same in the last year. All right, not bad. Our community members have this as an average of a hold with an intrinsic value of 281. Let's see what analysts think for this company. So they expect earnings per share to grow from 15.31 a share, actually 15.46 from March of 2026 to $21 a share in the next 4 years. Revenue to grow low single digits, 3 to 4.5%. Makes sense. It's not going to be a big grower here, guys. It's going to grow along with inflation along the way. So you got to remember that when you're running your stock analyzer. So to really quick do this, now we sit there and we have some general idea of what the company looks like. So I'm actually going to adjust this. I'm going to do 2, 3.5, and 5% revenue growth for the next 10 years. Okay. Profit margin, I'm going to do 9.5, 10.5, and 11.5. Same with free cash flow. Now, what's the PE and price of free cash flow 10 years from now? Well, it's a great business. It's got a great brand awareness, got great returns on capital, got good growth. So I'm fine putting 17, 20, and 23. Not good growth, but stable. Like this is a stabilized company. The chance of this company going to falling, I mean, when people need items today, they're just going to go to Home Depot. Plus, guys like going there, they like hanging out, etc. Now, finally, what's our desired return? Now, I always put in 9 or 10%. And the reason being is I want to find what's my intrinsic value. Now, guys, don't forget, after we're done doing this stock, we still have a lot of things to go over in this video, so make sure you keep watching. But the other thing is, if you like what I've done so far, this is a scratch of the surface. We talk about, we truly believe that if you come to the channel, you learn the things you want to learn, you expand on the things that you really understand, you will become a better investor from this. We're here to teach a principle-driven approach to investing. If you're just the kind of person who wants me to say to you, go buy the stock, not me, won't happen, never going to happen. I'm here to teach a process so that you can become a better investor. So I do my 9% desired return, but remember, you want a higher one than that, but this is just to figure out what the intrinsic value is. I hit the analyze button. The stock is currently at 340. I have a low price of 240, a high price of 445, and a middle price of 330. Okay, so it's getting close to my middle price, but remember, this return down here it still includes the dividend. So I'm not quite a buyer yet. I currently have it on my watch list at 250. You know, maybe I make it a little bit higher. So maybe I'd go to 275. I think things have gotten better since the last time I ran the numbers. So I'm sitting there and adjusting this, and now the software will notify me when the stock hits 275, so I can then come in and do a more thorough analysis. Remember, don't waste your time diving deep in a company if it's nowhere close to your price. Just wait for it to hit your price, then go do more. That's the big key here. All right. That's very important for us to understand. Now, like I was talking about before, Microsoft and Amazon have both been downgraded. This might be the reason. Amazon, Microsoft Cloud Services could face tougher EU rules. Now, the European Union, they're very big on regulating companies. I can understand why they want to, but they're socialists. So I wonder about this, but this could, if this involves strict rules that hurt the business, this is a big growth center for both companies, very high margin. We're talking 70 to 90% gross margin. That means every extra dollar they sell, 70 to 90% of it goes to the bottom line before taxes and before overhead. So this is a big deal for them. It's the biggest growth factor for both these businesses. So of course, people downgraded them. I laugh whenever I hear this. I look at it going, people only react to the news as opposed to thinking themselves, is it possible that the business won't do as well in the future as it's doing now? But when things are going well, people are very quick to say, this is going to keep going forever. Guys, nothing goes forever. We always teach on this plan, if a company is growing 15% a year, it can't grow 15% a year forever. As time goes on, you've got to decrease that growth overall. Now, of course, there are the outliers that have temporary 5 to 10 year big growth jumps. But a company like Amazon, let's look at Amazon. Let's pull up Amazon here and let's look at their growth rate, revenue growth over the last 10 years, 18.5% a year. Last 5 years, 8.6. Last year, 11.5%. Is this likely to continue forever? I doubt it. As the company matures more and more, it's harder to grow. Because if it grew 18.5% a year for the rest of the time, it'd be bigger than the entire world economy at some point. That's just not feasible. So for those of you who use our stock analyzer tool, keep that in mind as you're putting your assumptions in. It can't grow amazing numbers forever. At some point, it stabilizes. What's that level? That's what's hard. What's the level of growth? Depends on the kind of company, but I would think world GDP growth rate per capita is probably the reasonable number. Maybe not even per capita, maybe a little bit higher. The overall nominal growth rate, I don't know. These are things we talk about in our community. So, but look at Amazon. They're down 3.5% today. Microsoft is down another 2.5% on this news. But Amazon was down even further at one point. It's at 223. It was down to 222 at one point today. So it's being hit. Remember, these are short-term things. Who knows what's going to happen with that? We don't know what's going to happen in the future with this. Is this going to be a permanent bear market for this? Same with the market in general. Let's pull up the NASDAQ in general. It is down 0.63. Let's pull up QQQ, the NASDAQ 100 ETF. In the last 1 month, it's down 2%. The last week, it's 3.5%. Year to date, 17.5%. But here's what's interesting. From this point, it was at 402 back in April 7th. Now it's at 600, almost a 50% increase since the low of April 7th. That's incredible, guys. That's absolutely incredible. Let's actually go to the exact number, 0407, up 41.6%. That's incredible. What an increase. What an increase. Unbelievable. But look at it from its high to its high was October 29th. Just 2 weeks ago, 3 weeks ago, over 50% growth. I feel like things are just overbought, guys. Things are just real. I know I've said it for a while. And you look at Michael Burry, I'll say this till I'm blue in the face. Michael Burry closed down his fund saying, I'm not seeing the value there. My idea of value and the market's idea of value are not the same. Reminiscent of the late 60s when Warren Buffett shut down his fund. It's a tough market out there to find good companies selling for good prices. Now, if you're able to find them, remember, if we have a bear market, then it's likely to get better from a pricing standpoint. The question is, will you have the ability to lock out all the noise? Yes, Home Depot's profit is down, but will it be down forever? No, it will not be down forever. At some point, it'll stabilize. Will it take a hit if we have a recession? Absolutely. Are we going to have a recession? We don't know, but there's a lot of indicators out there that things are getting harder for consumers. That's what's very interesting. These are part of the things we always talk about, guys. It's not just this idea of what's the easiest, what's the most perfect metric that tells us everything. Nothing tells us everything. We still have to remember that we're here to assess companies and we're here to determine what the right price to pay for these companies are during long periods of time. If you're just looking for this quick fix on this, what's going to happen in the next 6 months, it's not going to work. You're not going to be an investor. You're not an investor. You're a speculator because we have no idea what's going to happen in the next 6 months. Trump just came out and said Alibaba is what does he say? Let me pull up the exact article here because I want to make sure I get this exactly right. Trump's company came out, not company. Alibaba is helping Chinese military target the U.S. That's a White House memo claim. Okay, let's see what Alibaba is doing today. Let's figure this. Let's go see if that's hurting Alibaba. I wouldn't be surprised if it is. BABA, Alibaba. Oh, it's up. It's up 1.7%. I don't know, maybe all the bad news is out on Alibaba. So this isn't necessarily a bad thing for them. Who knows? But Alibaba is a company that I own, and I had it taken away from me in covered calls, but I was accumulating it all the way down to, I don't remember, $70, $80 a share. My basis was probably around 120, 130. I don't remember the exact basis. So I made a few bucks, but I got it taken away from me in covered calls. Kind of sucked. I wasn't a fan of that, but that's the way it works with covered calls. And for those of you in our community who sell covered calls, Be ready for that. I'm changing my way of selling covered calls on massively low price to value stocks. Remember, I want to buy companies where the price and the value are disconnected, where price is below value. That's the main goal here for any company we buy. That is the main goal for any company you buy. Dollar cost averaging to low cost ETFs every month like I do. That way you're just in the market at all times. But when it comes to individual stocks, you must be picky. Now, tomorrow is NVIDIA. Let's pull up NVIDIA here. Well, actually, let's go down to our earnings release for tomorrow. What time does NVIDIA report? After hours? Oh, it was right there. I apologize. So NVIDIA reports tomorrow. What's expected from NVIDIA? Let's check this out here because it's really important. Okay, so tomorrow, NVIDIA is expected to report $54.83 billion in revenue, $1.22 per share in profit. So let's compare that, 54.83. So let's go back to NVIDIA. Let's go to NVIDIA over here. And let's look at what they did last year, same quarter, 54.83. We're going to go to quarterly. Last year quarter ended, wow. They did 35 billion last year. That's over a 50% increase in revenue year over year. $1.22 per share in profit would be better than the 79 cents. That's another 50% increase. Wow. Guys, the company's incredible. The company is absolutely incredible. It's really, really an incredible business. The question is it pricing in perfection right now? That is the question we must ask. It's down significantly from its high, from 212 just 3 weeks ago to now it's at 183. Remember, we think NVIDIA, we think the Mag 7 will be the biggest ones to fall once the fall starts. Once this collapse, because this is what drove the market up, this is what's going to drive the market down. So be very cautious when buying these companies. Make sure you think you're finding value here. So guys, that's where we stand here. I appreciate your time. Do me 2 favors. 1, subscribe to the channel if you haven't already, but you want to have these videos going over things in the market on several times per week. And 2, if you've been watching us for a while, even on the main channel especially, and you're ready to take the next step to become a better investor, check out our community, check out our software. It'll make you a better investor if you're willing to put in the time and you're willing to learn. Everythingmoney.com, click the link below. We have a 7-day trial. 83% of the people who sign up for the 7-day trial buy the full year. That's how much they love it. Thank you for your time.